The big global story of the day then, the Organization of Petroleum Exporting Countries has decided to maintain its production levels for at least another 6 months. The OPEC believes that demand and supply situation is healthy and they also see the global economic situation improving. However, in a categorical statement, they admit that the era of oil prices at $100 is over now. Joining us now is Vandana Hari of Platts to discuss the road ahead for crude oil. Vandana, thank you so much for joining in. What do you make of the OPEC's decision to maintain production levels for the next 6 months? And, more importantly, what does this mean for oil prices in the near term?
Hi, Kritika. So it was an entirely expected decision. And basically, what the signals to the market is that the strategy that OPEC adopted last November, as controversial as it was, they're wanting to stick with it. They want to give it some time. They want to see if how that plays out, and they seem to have expressed confidence that it will work eventually. The market just needs to give it some time.
All right, Vandana, more importantly, the Energy Minister of Qatar made a categorical statement that the era of oil at $100 is over. What do you make of that? Because this, of course, will be crucial for us in India. Will oil prices remain where they are, at least for now?
Yeah, so I don't think, Kritika, anybody would dispute with that statement. Why 100? I think people are even finding it very hard to imagine prices going up, even up to 80 in the current scenario. A lot of the OPEC ministers in Vienna this week said 70, 80, those kind of prices would be nice, but sounds more aspirational rather than something that is achievable. So, as you quite rightly point out, it is good news, definitely, for energy-intensive economies that are still growing at a healthy rate, still growing their oil demand. So, definitely, China and India are amongst those. We've seen that countries in this region, especially a lot of others, including Indonesia, Thailand, Malaysia, have actually used this opportunity to get rid of some very costly fuel subsidies. India's done the same as well. So, now is the time, I would say, to continue completely unwinding fuel subsidies, because it's at least you don't have that sword hanging over your head that the prices might climb back up anytime soon.
So, keeping that in mind, what's your near-term and long-term outlook for oil prices in that case?
So, in the near term, I think what we have seen for 50s and 60s, we've seen kind of a temporary stability around those prices, and possibly we'll continue seeing that for the time to come. In the longer term, I think first of all we have to find a more enduring, sustainable equilibrium for prices. We really have to. I think the market has to test some fresh lows, where it will curtail some more of the high-cost marginal production, because there's still nearly 2 million barrels per day of oversupply. Either that has to happen, or a combination of that and demand catching up by 1.5 to 2 million barrels per day. Only then we can think of longer, more stability in prices. I think near term you will see a fair degree of volatility, just because on a fundamental level, the market is still very, very imbalanced. $100, I really can't see that happening, because what's happened with the shale oil, or the tight oil rather, from shale producers in the U.S. is that it has completely redefined the cost of oil, the marginal cost of oil. So, longer term as well, I would imagine 60s, 70s at the most. But again, that's not very long term, because in the next decade or so, I think the U.S. production should start sort of declining as well.
All right. Well, and also Iran is looking to increase its oil production. Right now, of course, not many countries buy oil from them, especially the West. If they do manage to strike a nuclear proliferation deal with the U.S., what will be the impact of all that oil entering the market? Can we expect prices to plummet further?
Absolutely. So Iran is saying that they could supply up to 500,000, 600,000 barrels per day in very short order. They're saying maybe perhaps even a month. And they will ramp up to maybe buy about 1 million barrels per day in a matter of a year after sanctions are lifted. Now, of course, we have to bear in mind that there are a lot of ifs and buts around the sanctions. So assuming, of course, this is assuming a scenario that sanctions are completely lifted, Iran could put maybe not 1 million, that is probably too optimistic, but at least 500,000 to 600,000 barrels per day more into the market. Now, given how much of a glut and oversupply there is already in the market, that will definitely put a renewed pressure on the prices. Similarly, we have Libya as well, which is now doing about 500,000 barrels per day. They could, in theory, they can do 1.5 million as well. Iraq wants to increase its production and has been increasing its production despite ISIS. So overall, it's the general scenario right now seems to be the possibility of much more supply coming onto the markets, but definitely not the possibility of much more demand coming up in the market.
All right, Vandana, we'll leave it at that. Thank you so much for joining in on this show and giving us that perspective.